Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting. Hello friends. Let us in this chapter discuss about the modes or channels through which you can place your surplus money in different financial instruments. This can be simply referred with one term called financial markets. As has been mentioned in earlier chapters, the different instruments shall have different modes or channels. To start with, you can just imagine a physical marketplace in your town or village. There can be a vegetable shop which might sell different vegetables, and at the same place there can be one shop that sells just one vegetable, say potatoes. There can be a fruit shop which might sell different fruits, or at the same place there can be one shop that sells just one fruit, say bananas. There can be a grocery shop which might sell different food ingredients. At the same place there can be a shop that sells just one ingredient, say chilies. There can be a supermarket which shall sell all these items under one roof. Also, there can be a wholesale shop intending to cater to resellers or traders, and there can be a retail shop intending to cater to actual consumers. This imagination is just about a physical market. There are also elements pertaining to online shops or telephonic shops, etc. Now, by simple looks in financial markets too, the basic structure can be very similar to this market structure. We have touched upon in earlier chapter about physical delivery, paper delivery or electronic delivery for different instruments in different places. Let us look at a few examples in order to slightly expand the mindset or thought process on this. If we look at gold, you can choose to go to the nearest jeweler and buy gold and get physical form of delivery. You can also choose to buy a gold-based exchange traded fund, shortly ETF, that will be delivered in electronic form. Another example, if you look at bank fixed deposit, you can choose to go to a bank and open a deposit, and bank will hand over a deposit advice or deposit receipt to you. Let us call this paper form. You can buy the same deposit through online mode, and the same shall be delivered as electronic form. In present day and digital age, most common delivery method applying to many instruments in many places have become electronic. This is in another word referred as demat or dematerialized form. Here again a little reminder that the different instruments shall have different modes or channels. We have now looked at marketplace from two perspectives, namely type of seller and type of delivery. Let us look at this from third perspective, which is the type of regulator. Each instrument will have different channel, and this will be majorly driven by the law and regulations applicable for the same. For example, if you look at fixed deposits, these are generally governed by rules and guidelines by Reserve Bank of India. Same way, for shares of listed companies, most of the rules and guidelines are drawn by Securities and Exchange Board of India, shortly SEBI. Same way, when you buy gold from a jewellery in physical form, that comes under goods and services tax. However, when you choose gold ETF, there is no GST for the gold involved. However, there will be GST on transaction charges. The mention here is not really about the regulator or the regulations. What we are trying to discuss is the operating channel somehow gets structured based upon or around the rules and laws governing different instruments. In addition to these three perspectives, there is also another perspective of who the marketplace is catering to. There could be bulk buyers, retail buyers, and also middlemen. Who are these players and who are the interested parties for different instruments also influences our analysis. The players present in the market are generally referred as participants, market participants. We should also understand there are various options of middlemen or routing channels. This again shall be different for different instruments. For example, there are mutual funds who are catering numerous instruments to reach common public. Let us accept that these middlemen channels are generally operated under extremely organized structure and a very well regulated environment under different statutory models. It is imperative that we are responsible for protecting ourselves, and considering the strength of the regulations present, we should equip ourselves to identify wrong calls and fraudsters. Let us look at an example for better understanding of different perspective discussed here. If you look at placing your money in a bank fixed deposit, first perspective is the type of markets. We really know banks are the markets. Let us for this example presume it is State Bank of India, shortly SBI. Second perspective is type of delivery. SBI either delivers a paper form of fixed deposit advice or it can be electronic form through net banking. Third perspective is type of regulator. For banking operations, most of the regulations are drawn by Reserve Bank of India, shortly RBI. If there is someone not governed under RBI regulations, it is open and clear that this is impossible in India and beware. Fourth perspective is the type of players. It is very easy to become a direct customer of SBI. However, they might also offer or accept deposits through indirect channels like some authorized mutual funds or direct selling agents. However, there is more analysis to be done when choosing indirect channels. We will have more detailed explanation and information when we are discussing in a separate chapter about each instrument. For this chapter, this is mentioned just for understanding the different elements in modes or channels. In summary, when you say channels or modes of reaching financial instruments, that includes major elements of type of market, type of delivery, type of regulator, type of participants. This is not a complete list. As we discuss each instrument in future chapters, we shall cover the channel or mode of accessing each instrument one by one. Going forward, we shall look at the marketplace and all these perspectives for each of the instrument covered in our discussion. Also in subsequent chapters, we will see about time frames involved in your decision making and different parameters required in analysis for decision making. With that, I'll close this. We will see you in the next video. Thank you. Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting.